Inflation is a generalized rise in prices. The price of eggs goes up, the price of gas in your car goes up, the cost of employing people goes up, etc. Debasement of currency is this really weird little trick. Things of fixed supply or relatively fixed supply go up immensely, optically, because the price of the currency's fallen. Things of variable supply, like wages, corporate earnings, don't, and they don't go as much. So what you find is, after quantitative easing, what happens? Stock market goes up, gold goes up, cryptocurrencies go up, housing goes up, fine art goes up, all of that stuff. Assets. So assets are a way of storing wealth. That's what an asset really is. So in relative terms, they've held their price and the currency's fallen, makes them look like they've gone up in price. It's not. And this is what everybody gets confused with. This is why price earnings ratios have gone up so much, because the earnings doesn't move as much as the price of the asset, because it's a small fraction of it. So PEs keep going up the more we debase currency.
Bitcoin, the largest cryptocurrency by market value, was recently trading at $23,000, up 0.04% in the past 24 hours. The total volume of Bitcoin options on Durbit rose to 4.25 billion last week, the highest point since Sam Bankman-Fried's FTX exchange went bust in the second week of November. Hello and welcome to Money Talks. In today's video, Real Vision CEO Raoul updates about his outlook for Bitcoin in 2023. Raoul also breaks down the importance of regulatory clarity in this space and how it will drive the future of institutional adoption in crypto.
So there is an expression, Warren Buffett's used it, is when the tide goes out, you see who's swimming naked. So the tide out in this is liquidity. And liquidity is driven by central banks trying to stop inflation. So they raise interest rates when they think there's inflation. It slows down the economy. It's harder to borrow money. The whole economy slows down and we restart. It's called the business cycle. And you and I have talked about this in the past. So the economies are cyclical. They're naturally cyclical because the credit cycle, even without central banks, is you kind of lend or borrow too much money, then something happens at the margin and you're like, oh shit, I borrowed or lent too much money, and you pull it all back again and then you do it again, right? So the central banks try and soften that cycle, but they still create it and use it to try and not let economies go too far, like hyperinflation or depression, whatever it is, right? So that's what they're trying to do. That cycle drives the movement of asset prices. And so that's the stock market, the bond market, equity market, the currency market, the crypto market. And with that cycle becomes the human emotion cycle. And the human emotion cycle is, I'm making a fortune, I'm a genius, I can never go wrong, I'm going to be rich, extrapolate, future vision of myself is now going to be driving a Lambo and, etc. And if you think about it, and that's exactly what happens to all of us, and we have to fight that demon, is you start extrapolating out and you start thinking, my vision of my future self has now been ratcheted up. So investments are just a manifestation of your future self, right? That's what we're trying to do. So you got that vision of what you'd like to be, and to get there, you invest because that will deliver that. So if your investments do well, you start stupidly readjusting yourself higher all the time. So then what happens is when the market goes against you, you have to go through the emotional inner journey of, oh, maybe I won't get there, right? That's really hard for people. It's emotionally really hard to kind of plant a flag on that's what my future is definitely going to be, definitely, because I'm really good at this investment game, to I was completely wrong. And what happens is you then over extrapolate on the downside. If this continues, crypto is going to zero. All of my savings that I've been dollar cost averaging, listening to Tom and Raoul, it's all bullshit. This has been a scam. It's the exact opposite. But when you step back, you take a nice logarithmic chart of Bitcoin, and anybody can do that on TradingView or any of those charting things, and it's a nice, smooth, upward trend, which is the adoption of cryptocurrencies and blockchain technologies as a new financial system and a way of exchanging value on the internet. In the middle of that, on a log chart, it just looks like it slowly does that. On a linear chart, it looks like this. But no, it looks like more correct, it does this, collapse. And what happens is everybody goes, when it goes up on a linear chart, everyone goes, it's a bubble. People who aren't involved. Then we all get to the over extrapolation of like, we're all going to be billionaires, let's order my Lambo. Then it starts coming down, it's denial, typical, the human phases of emotion. And then you get to anger and despair, which is where we are now. But that whole story of humanity, liquidity, central banks is all within this long, smooth uptrend that keeps going. And people forget it. They forget it at the bottom and they forget it at the top.
Bitcoin and Ether's trading range has begun to narrow as the two largest cryptocurrencies by market capitalization look to establish new areas of support following last week's 8% and 5% gains. BTC and ETH's price movement has yet to exceed a percentage point over the past 4 days. BTC rose 0.4% on Saturday, declined slightly on Sunday, and inched upward 1% and 0.09% respectively over the first 2 days of this week. Ether has traveled similarly during the same period. Bitcoin's chart implies new support levels forming near $22,900. The Volume Profile Visible Range tool shows increasing levels of activity and price agreement at this mark. Often, these are called high-volume nodes and can indicate where the market sees an asset as fairly priced, at least for the moment.
To go back to what you were suggesting, has anything changed in the crypto market? Not a thing. Is the technology being utilized? Has Solana just agreed to use their blockchain with Meta for NFTs? Yes. Are Google working with Solana? Yes. Is Ethereum being built out? Did DeFi fail? No. Does the decentralized financial system idea work? Yes. Are cryptocurrencies being exchanged in a value system on the internet? Yes. Is the number of people growing in that ecosystem? Not a lot, because it's stabilized. But if you look at the past cycle, so the 2017 peak to the low in 2019, we lost about 80% of the active wallet addresses. Wow. When I look at it now, we've lost about 30 because the adoption keeps rising. So it really is a psychological game. And it's a long-term game because, and you've talked about this, is we're not involved because we can make money over a 1 year time or a 2 year time. We're saying, listen, the bet here is if you hold on and if you add at the bottom of the panic cycle and just keep holding and don't use leverage and just be sensible about what you're doing and don't keep checking the market every day, the probability of you coming in at the end of the decade and having manifested your future self in a way that probably might be quite unexpected. And if you do that, you won't go through that emotional journey.
The pullback comes as U.S. equities fell on Tuesday after technical glitches at the New York Stock Exchange briefly disrupted market trading. As such, some traders warned of an impending drop in the coming weeks. While the rally looks promising on paper, the reality is that there are still limited traders in the markets. Analysts at Bitfinex wrote in a January 19th note sent to CoinDesk, with the recent leg up driven purely by sentiment, low funding rates, and cascading short liquidations.
I asked many people who were like, I hate the Fed. I'm like, okay, 2008, what would you have done? Well, I wouldn't have got there in the first place. I'm like, okay, but they did. And how do you get there in the first place? Well, and again, watch that video with Raoul Breedlove. I'm like, well, that was a factor of globalization. Would you have stopped that and foreseen the outcome of that? And then that was a function of the baby boomers and World War II. And there's so many factors. It's like, no, they're doing the best that they can. Now, nobody wants the debasement of currency. But if you don't, what is the outcome? That's why I ask people. If you don't buy the debt, if you allow the collateral of the system, because the US is the most indebted economy in the history of the world as a percentage of world GDP, It's over 100% of world's GDP in debt. And that's not just, that's the country, the people, the corporations, right? It's the whole lot, the total debt. So what do you want to do? What do you want to do? Do you want to let all of that collateral go to zero, the whole system burn to the ground, and a complete destruction of lifestyle, even whether we're living in a fancy lifestyle driven by debt and other stuff? Do you want to destroy all of that? I don't think you would. I don't think anybody would. So in which case you need the central banker to try and just juggle the bloody balls in the air. And yes, we get angry because it kind of gets the rich get richer because it keeps driving those assets up, and the poor get poorer. So we have to focus somehow on that. But America doesn't like the idea of helping poor people. They think it seems to be, you're a communist. It's ridiculous. You know, why would you not have a welfare state if you've destroyed the ability for wages in real terms to rise over the last 50 years? They've not risen at all. So you need to think about this. And this is why technology people are thinking about universal basic income, because these same people in the workforce are going to compete against robots. They have no chance, zero chance. So there is a lot of structural issues here. And I don't think you can do this without government.
So, is it a good time to invest in Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.